Thank you guys for joining today. I wanted to talk a little bit about the different cycles in mining and what we saw last cycle. So last cycle, we saw investors looking for public market exposure. And the way to get public market exposure was through mining companies, right? Like they were like this big thing that happened, still account for about 30% of the total network. They were the corporate proxies, right? And you buy shares in a miner, essentially buying a leverage bet on Bitcoin. But miners came with all this baggage, right? Operational issues, energy contracts, hardware cycles, which we all know and love. But this cycle, we're seeing this different playbook. We're seeing pure Bitcoin treasury plays happening. So instead of running power plants and managing ASIC fleets, the companies are focused on balance sheet exposure. So today, I want to talk a little bit about what's driving this shift. Why do investors like this treasury play? And what lessons from the mining cycles in the last cycle of public companies can we use to learn from treasury companies? And ultimately, how these companies will succeed or fail as Bitcoin continues to institutionalize. So Adam, I'm going to start with you. Are treasury-focused companies inherently more capital market friendly? And why might investors pick this model over other models that exist?
Well, I mean, of course, the simpler thing to do is just buy Bitcoin and cold store it, or failing that, buy a Bitcoin ETF. But the treasury company phenomenon is basically started by Michael Saylor at MicroStrategy, initially to solve an inflation problem that he could see with his, I think, $500 million cash reserves, presumably held in US Treasuries. And so he, converted a good part of that into Bitcoin. And, a lot of people thought that was it. He was just going to hold Bitcoin, but he kept buying, and then he kept buying, and he kept buying. And people realized there's something else going on. And then effectively, I think they sort of discovered some things as they went, and they were quite transparent about talking about, the lessons they learned and new capital market tools they're able to use. So I think basically, you start to see something like a PE multiple, which is people are looking at the value of a company based on its predicted future earnings in a traditional company with products or services. And effectively, the product or service of a treasury company is its ability to increase Bitcoin per share over time. And so then people are looking at the trailing increase in Bitcoin per share. Strategy calls that yield. I mean, in any case, the increase in Bitcoin per share annualized, and then they are sort of indirectly pricing the strategy company or the treasury company based on it. So they will achieve some MNAV, which is, related to a lot of factors. However, the market decides, it's a market-decided pricing at that point, right? But I think you can sort of do some calculations, somewhat PE ratio-like, between, for example, how many months does it take for the treasury company to increase Bitcoin per share to pay for the current MNAV premium? And that ranges between, I'd say, like 18 months plus for MicroStrategy, now Strategy, and as short as, maybe 5 months with Metaplanet, maybe H100, and perhaps even shorter with a few of them. Now, of course, if you have a very short months to cover, it means the MNAV is very high, and that has an implied risk that the Bitcoin yield could decay, and then you've overpaid for it. I think it's an interesting trade as well because it's a little bit forgiving. You buy it with what turns out to be too high an MNAV, and then they're slowly undoing, reducing your cost base by increasing the Bitcoin per share behind you. And if you stay in market long enough, you can potentially get to par, which is a very comfortable place where your cost for the shares is 1 Bitcoin for, 1 Bitcoin worth of Bitcoin inside the shares. And then you are insulated to the extent that probably the treasury companies won't trade below 1x unless, there is some risk perception or over leverage. So on your mining point, I think the question is, there are now lots of treasury companies, whether some of them will end up too leveraged, which has historically been a problem for mining companies because it was quite difficult for them to get traditional infrastructure financing. And so they were using ASICs or Bitcoin collateral, which is volatile. So that was a source of problems historically.
I want to just say the question again for you. Are treasury focused company is inherently more capital market friendly. And so why do you think investors are going with this as an option?
There's multiple reasons. I think right now we're like in the craze phase. So there's a lot of people are like I always say, people buy a stock to sell it higher, right? So right now in the first wave of treasury companies like Bitminer, Ton, where like a lot of them, you see a pump in stocks. And what you're seeing now with the newer ones, the velocity has changed, right? So I always look at, a successful treasury company is able to achieve velocity. That means they can accumulate Bitcoin and Ethereum at a faster pace, and they can access ATM or different convertible structures, right? And that's really like the ones that succeed. Like taking a future look at this, right? It's like, why would somebody buy the seventh Bitcoin treasury company or the eighth one, right? You'll see a lot of like institutional investors really rallied in the top 3, 4. I think the success is really defined by velocity. That's the differentiation between the winners and losers.
Yes, to add on to that, I think Bitcoin's gone through a fundamental shift, right, in terms of corporate adoption. I think when Strategy got onto it, when Saylor got onto it, what he realized was the hurdle that people have for access to Bitcoin. And direct access was versus ETF versus an equity company. And I think enabling to get Bitcoin on your balance sheet gives you that access to get Bitcoin there. Jurisdiction-wise, for example, in India, there is literally less than 5 exchanges that you can access, and to get to Bitcoin, there's too many hurdles. There's too many regulation unclarity, too many submissions to ITR and whatnot. So I think the access to Bitcoin through capital markets is what the next wave of Bitcoin is going to be.
And why now do you think the treasury companies are kind of popping up everywhere?
I think the treasury company playbook has been defined to a very large extent. I think Strategy, the way they did it and made it happen, I think it's a clear roadmap that any other company can follow.
Yeah, I would say regulatory is a huge thing too, right? So regulatory barriers falls, and it allowed companies to actually start to think about how they could use Bitcoin in a public setting very differently.
Yeah, I mean, actually, when MicroStrategy started, he had the evolution where he bought Bitcoin. People just thought initially as an inflation hedge, but then once they started repeating that and initially using corporate bonds, I thought he was doing something interesting, which was, trying to persuade other companies of the advantage of using Bitcoin as an inflation hedge. So I wanted to support that, and actually they started an annual conference, MicroStrategy, to show the playbook, because it wasn't simple initially for a public company to explain to their auditor, to the regulator about how they're doing it, why they're doing it, how to account for it. So I thought that was really useful, and so I thought one way to support them is if a lot of Bitcoiners bought a little bit of his shares, collectively we would provide support if Wall Street didn't like his strategy. But it turns out, their largest shareholder is Capital Group. It's a big blue chip investment firm. So they have actually a lot of institutional investors and even sovereigns. I think the Swiss National Bank, 1% of their share allocation is in MicroStrategy, for example. So it's actually proven to be a different road into getting a Bitcoin exposure. So, now what Amanda was saying is that some people were using public mining stocks as a proxy. Now you have spot ETFs in the US, but now you also have treasury companies. And there can be some tax arbitrage in some countries where the tax treatment, for example, in Japan, on Bitcoin is 55%, I think, whereas on shares is 20%. So clearly, if you get your Bitcoin exposure through Metaplanet, it's a much more tax-efficient vehicle. So I think, as to why now, I was actually surprised that it took a really long time before anybody followed MicroStrategy, because he was proving his point and sort of in slow motion making an insane growth rate while all the public companies kind of sat around looking at their shoes. So it's sort of surprising that there were no followers for so many years, but finally that started to pick up. I think the first one was similar. Then Mara, which is a kind of crossover because they're a miner, they started also using capital market fundraising, not to expand mining, but to increase the Bitcoin on the balance sheet. So I think, the US regulation space improved, became more open for business, and the capital raising capability and the SPAC and RTO markets heated up as a vehicle for new entrants to become public via RTO or via SPAC or different mechanisms in different countries, or just to, transform a company, which is the Metaplanet case and in Japan, and the blockchain group, now Capital B in France. That was an existing public company who went into Bitcoin in a big way. H100 was a RTO. They merged a private company with a public Swedish, a small cap. So it's been interesting to see the rapid rise of actually many long tail of treasury companies at this point.
Yeah, one additional thought is it's a product, as Adam mentioned, that Wall Street understands now and they keep selling, right? I mean, what bankers care about is fees, and they know this is a new product that's selling, so that you're seeing a velocity of, we get pitched 20 treasury companies every day. So I think the banks are trying to get in on this, they understand this, and it's becoming a little crazy right now.
Are you seeing more demand at Kraken for different products for treasury companies?
I mean, Kraken's not a hedge fund, right? So we don't put large principal investments. We're very selective on this.
Less on the investment side and more on like the trading and treasury management side.
Correct. We're seeing incredible demand. We support Bitminer, which is I think the #1 Ethereum treasury company right now. Our qualified custody, is over 6 billion servicing treasury companies to date. Our trading, our staking, so it's been very good for our business.
And Sid, when you're thinking about treasury, like your treasury management, what solutions have you been thinking about that might be useful for you?
So we're still on the runway, right? So we haven't really taken off the way we should have, because we're right now in this whole surveillance mechanism where the stock exchange is monitoring how your volume moves. But ultimately, I think solving for India is solving for a very large market, and a lot of the time that we've spent is the acquisition and the custody of the asset to build the trust with the regulators as well as our potential investors. So I think at this stage, we're just solving for the more nitty-gritties of the market, and then at a later stage, we address a lot of the challenges that other companies have.
Building a company takes time, right? Yeah. Adam, question for you. Is the ATM machine going to be the backbone of the model? And then what risks do you think that creates for existing shareholders?
Yeah, it's an interesting topic, which, there are all these kind of online discussion groups or like Twitter communities on some of the treasury companies, and some of them are complaining about the ATM being used overly. But I think, in principle, while the company has a premium, it's actually in the shareholders' interest to use the ATM because it's increasing the Bitcoin per share to the benefit of all the shareholders. So, interestingly, something that MicroStrategy has been able to do is to issue the preferred shares, which are, some of them are convertible, some of them are not. They don't have a maturity date, so there's not a kind of big cash repayment window, which looks like a debt ratio risk. And they were able to get ATMs on the preferred shares. So now, when they come to the follow-on, if the market is active enough, they don't need to go to the investment bank to find institutional buyers or retail buyers. They can just sell into the market, which is a pretty interesting phenomena. I think that's still in development. The most successful of their 4 preferreds has been STRC, the most recent one. I think they sold $2.5 billion in the first go, where the other ones were in smaller increments. But they have still been using the ATM, and it varies, so H100 has been doing, H100 and Capital B have been doing in Europe, some Bitcoin-denominated convertible notes, which is another interesting twist because the debt is Bitcoin. The investor is lending Bitcoin with a right to convert that into stock if the share price goes up 30% or something like that. And then because the debt is Bitcoin and the collateral is Bitcoin, there's not really a liquidation or debt ratio risk if the price falls, because it keeps the debt shrinks as the collateral shrinks. And if it reaches maturity without reaching a conversion premium, they have the Bitcoin in custody and can simply give it back. So it's a very different kind of product. just because it's a different currency. It's Bitcoin instead of euros or Swedish krona. And then also using a lot of private placements as well as ATMs in the case of Capital B. And I believe MetaPlanet actually has predominantly used ATMs, and they don't technically have an ATM in Japan. It's a moving strike warrant to achieve a similar effect with extremely good success, you gotta say. So it really depends on the market dynamic, the MNAV they can hold on to, and if the market responds positively to repeatedly using an ATM-like vehicle.
And so kind of thinking a little bit about corporate treasuries, right? So do you think that corporate treasuries will evolve into a more active manager, right? Or will the miners that just hodl and just hodl only be something that will, like the market will reward more?
Well, I mean, many of them are holding. There's a few active things. I think MetaPlanet is doing some option, like selling put options, something like that. And BSTR, in our prospectus, which is filed with the SEC, we do say that we are, we'll look at low risk Bitcoin yield strategies. So, the different flavors, and people will price them as they see, right? That if there is some yield being created, then maybe that's an argument for supporting a higher MNAV, but then there's no risk-free return in anything, so people have to weigh up that trade-off.
Yeah, man, I think it goes back to, right, again, like what's the differentiation? Like if you have 20 Bitcoin strategy companies that are listed, Bitcoin treasury companies, why would institutional investors, retail investors pick one over the other? So we are seeing differentiation, like covered call strategies to increase yield on Bitcoin they hold on balance sheet, on custody. So I think that active management is actually becoming a real thing, and we're seeing more and more companies, more and more treasury companies adopting it.
Do you think that analysts understand that yet, though?
Yes.
Cool.
Yeah, I think
It took analysts a really long time to understand miners.
the velocity has changed. The amount of capital gone into the treasury companies in the past few months has been astronomical, in the tens of billions. So I think, as like we said, right, Wall Street loves this because it's a product they can sell. They'll cover research on it, so they're covering research on the treasury companies, and then they'll have to sort of adopt and learn very fast.
As I recall, there was a range of Wall Street analysts making predictions about, I think it was MicroStrategy's earnings, and they were all about 20 times out, apart from one guy who got it. So I think they still got some catching up to do about how to maybe, I don't know, like evaluate the earnings potential of Bitcoin or something. It may be to do with accounting rules as well.
And so right now we're in a pretty good space for Bitcoin price, right? I know obviously we're a little bit down, but not that much down. How do you think investors should think about Bitcoin price drawbacks?
So I think for us, we've been buying every day, and even though it's drawing, you have drawdowns there for Bitcoin. I think it's a long-term play, right? So today's price movement, 5-10%, whatever it moves. If you're keeping on buying for the long term, price is irrelevant. Today, I think, like Sailor says it's 90% off in the market, right? And you buy today, and even if it goes down to 90,000, for example, you find ways to buy more.
Mm-hmm. So last question for everyone. What's a long-term playbook? So do treasury companies stay as passive Bitcoin vaults? Do they eventually become developing products, custody lending, structured products, similar to how we saw miners evolve in the space too? Or what do you think, like who's going to win? Who's going to fail?
I think ultimately, I think Bitcoin is the hurdle rate in the sense that if your investment strategy can't keep up with Bitcoin over the long term, you'd be better off to stop doing it or sell those things and buy and hold Bitcoin. And that's been the case for the last 15 years. And the institutions are starting to wake up to this phenomenon. So I think, MicroStrategy showed that companies are starting to realize that. So I think eventually, maybe all companies will be Bitcoin treasury companies because it's a way to preserve spending power if you have a long time horizon. So then I think, of course, they need a core business because, not everybody can be a treasury company or there won't be any products and services, right? So I think it just becomes part of the corporate finance landscape ultimately.
Yeah, I think long term, basically, there'll be a few winners and a lot of losers. And losers, basically, treasury companies that trade below NAV. So we'll see a consolidation, and the treasury companies that work, like MicroStrategy and others, will acquire the companies trading below NAV. So I think that's, it's difficult to predict who will be the winners or who will be the losers. I think it's still very early. There's a lot of innovation happening in this space, active management and different strategies. So, but I think the next 6 months, we might start seeing acquisitions happening in this space.
So I do think you need an operational business with it, right? You need a cash flow business, which we had the session earlier. I think if you can generate cash flows from a peripheral Bitcoin business, so for example, we're in education and we intend to pivot to become a Bitcoin learning company altogether in like, say, 12 or 18 months. My point is that if you plug in your destiny into Bitcoin, you can find ways and business models that can end up solving for your operation business. So it is super important, according to me, and we're focusing on building out that cash flows as well.
Yeah. Great answers, guys. Thank you so much.
Thank you.